And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. It's great to have you join us, and hope your morning is going great. But let's take a look at how the markets are looking, starting with oil prices now. We see the extended losses today on expectations. The U.S. Federal Reserve is likely to indicate it will continue to raise interest rates in comments due out later, raising concerns of lower global economic growth and fuel demand. Brent crude futures for April delivery fell 23 cents to $82.82 a barrel in early trade after recording a 1.2% decline yesterday. U.S. WTI crude futures for April declined 21 cents to $76.15. It wasn't changed yesterday for most of the morning. The March WTI contract expired yesterday, down 18 cents. And the U.S. Fed will release the minutes of its latest meeting today, which will give traders a glimpse of how high officials are projecting interest rates will go after recent data showed stronger than expected employment and consumer prices. High interest rates tend to lift the dollar, making dollar-denominated oil more expensive for holders of other currencies. And back here, Nigeria's crude oil production output has risen above 1.6 million barrels per day, and it's steadily growing to hit the 1.8 million barrels per day OPEC quota. According to reports by the Nigeria National Petroleum Company Limited, this comes on the back of successful efforts made by government to tackle crude oil theft and vandalism. These include the deployment of some of the best-in-class surveillance tools and technology, establishment of Central Command and Control Center for effective monitoring and coordination, as well as launching of the Whistleblowers Portal and Crude Oil Validation Portal. In August last year, crude oil thefts forced Nigeria's production down to 1.1 million barrels per day, far below the OPEC quota for Nigeria. And to soft commodities now, Arabica coffee futures on ice rose more than 2% to nearly a 4-month high as the commodity continues to recover from a recent slide, while raw sugar futures closed down. March raw sugar SBC1 settled down 0.08 cents at $21.33 per ounce. The contract hit a 6-year peak of $21.89 earlier this month. According to dealers, they say the sugar, despite the small setback, continues to derive support from chatter that the production in India will drop rapidly this season due to the cane maturing early and losing weight. May Arabica coffee KCC2 settled up for $4.01. That's about 2.2% at $1.89 per pound, having hit its highest since mid-October during the session. The market has been driven primarily by concern over soaring prices in the physical markets in top producers Brazil and Colombia. May London cocoa LCCC2 fell 26 pounds to 2,118 pounds per ton. It had risen last week Friday to a 6-year high of 2,155 pounds per ton. While Ivory Coast Cocoa and Coffee Council, they say that the Ivorian cocoa exporters will still be able to honor their contracts despite slowdown in port arrivals. The Federal Inland Revenue Service and the National Information Technology Development Agency are collaborating to further increase tax payment, especially within the information technology sector. Representatives of both agencies had a meeting in Lagos to review the benefits of their collaboration so far, new developments, as well as strategies to employ in 2023 for a smoother tax collection system. One of the strategies is the 1% tax levy used for the development of Nigeria's information technology industry. Let's take a listen.
Prior to the introduction of the tax pro max, which this current administration under Honorable Chairman Mohammed Nami came on board, we had tried so many solutions. We now decided to say, let us do a homegrown technology, which is the tax pro max. I'm sure by now taxpayers are so used, to how the tax pro works. Because we had a challenge initially, even the staff did not want to embrace it. But after some time, we now discovered that it is an end-to-end administration process for the service. Because you can use this tool to register for your business, to file your returns, to make payments, to generate your receipts, all using the tax pro without visibly going to any of our offices. And just the 1st of January this year, we now even introduced a TCC service. You can learn the comfort of your, sitting rooms and offices and print your tax clearance certificate. So that is a plus for the FRS. We have decided to group our taxpayers based on the turnover threshold. So any company that has a turnover of over 2 billion naira and above, we categorize them under what we call the large taxpayers, department and offices. For those that have 2 billion down to 500 million, we categorize them under the medium tax, payers offices. And for 500 million and below, we categorize those under micro and small taxpayers offices.
Now, to our first conversation, well, it's election season, and for the next president of Nigeria, one of the key decisions he must be certain about is what to do with Nigeria's massive debt and debt service burden. That's both local and foreign. This is one major issue you must think about before casting your vote come Saturday. Let's talk to Professor Olabisi Akinkugbe, Professor of Law and at the Mullich School of Law and co-convener, African Sovereign Debt Justice Network. Join us via Zoom. Great to have you on the show. Good morning.
Good morning.
So, obviously, this debt issue is staring us right in the face right now, and most of the candidates have made campaign promises from economic growth, lifting Nigerians out of poverty, and a host of other promises. But going by our bond performance recently, we've seen Nigeria's dollar bonds have declined about 6.8% over the past month. So it's looking like investors are not buying these promises. How are you seeing it?
Well, thank you very much. I guess on the one hand, the way to start this is to say it is not unusual in an election year for there to be slow rate in terms of movement in foreign direct investments generally towards the host state. So Nigeria will not be in a peculiar situation in that context. But the more immediate reason that one can think about is not also far away from the ongoing challenges that we're facing with respect to what is going on in Russia, to what is going on around the world post-pandemic. But most immediately is the fact that a lot of what we're seeing is also a question of Nigeria's current economic challenges. And this, as you have said at the top of it, has a lot of roots in its own debt challenges.
And obviously, it's no easy task there. From the last report we got, the next president is going to inherit about 77 trillion naira in debts. That's information from the DMO. And I'm wondering, how hard is it going to be for the next CEO of Nigeria?
Thank you very much. It's a tough task. Indeed, Nigeria's debt profile since the turn to this new republic in 1999 has consistently, maybe say with a period of 3 years where we had debt forgiveness, has consistently be on the rise. The latest DMO report as per last quarter in 2022 indeed indicated that at least 80% of our loan debt is being used to service the debt that we have. So that means there's a huge challenge with the government, the next president, in terms of how they're going to turn around Nigeria's debt profile, particularly with respect to how principal amounts sought, on the one hand from debt and loans from external and domestic sources, are used to finance significant projects that can really move the country forward as opposed to servicing the debts. Closely associated with that is how the CEO, indeed, as you said, will try to trim down, if not completely eliminate, the bogus debt profile. They have all made promises towards that. We'll see what it will be like.
And how painful do you think the process will be to actually trim down, most of these expenses?
Oh, I think Nigerians are going to feel it. It is the reality as we look at the economies around the world today. I'm speaking to you from Halifax, where the inflation rate is going high consistently since January. So one of the candidates, for example, has indicated quite clearly that the subsidy on petroleum is going to be removed as a way to go forward. Nigerians are going to feel that. So there's no gainsaying that we have to be prepared to pay the price for this as a people. It is the reason Nigerians should indeed be concerned about each candidate's approach to dealing with this debt issue.
And what would you say is a realistic time frame to see some, positive impact on our debt level, says the next, president takes over? What kind of time frame should we be looking at? And what indicators should we also be looking at to see, oh, okay, we're starting to see action? And what kind of action should be taken immediately, hitting the ground?
So in terms of timeline, there's no quick fire solution to this. I think Nigerians will demand of their next president immediate, relief in terms of high costs of food, access to health care, and questions around national security. Those are indeed, everyday issues that the high debt profile and its servicing rate has denied governments, even at the subnational level, I'm talking about the states now, the capacity to really deliver on. So that is one hand that, one cannot say within a year or a year and a half, we will see this starting to slow down. But the other part of it is that it's not enough for government to say until they solve the issue of debt, they won't be able to deliver. They are voted into offices for a limited period of time, and it means they want to do their best to quickly ameliorate the hardship that the people are feeling. And so issues surrounding, queues for fuel, how to imagine more consistent power supply, and most importantly, I think, as I've said, high cost of food is one that pinches every Nigerian in the pockets, whether rich, whether poor. And so you would hope that there'll be policies that'll be geared towards, ameliorating these, in terms of value chain supply and capitalizing on the local suppliers and not just looking at the outside suppliers.
And obviously, we see what's happening with our neighbors, Ghana, with the whole, debt situation right now. We've seen them talk about restructuring. The bondholders have complained. And looking at our situation, do you think the next CEO should just hit the road running with restructuring our debt?
That's a very good question. And I think we have to give Ghana the credit when they started their own pushback against what the IMF is doing, as suggested in terms of how to go about this. The question of restructuring loan debts is one piece of the puzzle that has to be dealt with. Fundamentally, our next president has to think about their engagement, the modus operandi of their engagement with the international financial institution, the architecture that comprises of the loan structure, whether it's the context of private creditors, whether it's in the context of loans from the Chinese government, whether it's in the context of loans from international banks, such as the IMF and the World Bank, has to be looked at most seriously to think about, number one, issues that put Nigerians' interest, policies rather, that put Nigerians' interest at the forefront. And so there's a big opportunity here to start to renegotiate the terms of engagement for the new president that Nigeria will have.
And obviously, restructuring is definitely going to cost us something. What do you think, or how big do you think this cost is going to be?
Well, to put an amount to it is I think one I want to do here necessarily. But if we go by the current restructuring plans that is going on in other parts of Africa, then it's a long road because none of the structures that have been put in place by the IMF has really delivered for African governments. If you look at what's going on in Zambia, for example, then you look like one may also almost say the future is bleak in that regard. But it's not a reason not to try. Governments in Nigeria in the past have attempted, and successfully at that, to try their best to restructure our loans and even move for cancellation in that regard as well. One key area that could really be enforced is the surcharges, right, that are levied on this loan. There are specific actions that are taken by the IMF, particularly now, that really makes the repayment of the loans, the terms on which they are secured, very difficult for countries such as Nigeria to pay. And so I think in restructuring, that is one solution, but in also being transparent with the status of our debt profile, as I said a short while ago, as it relates to private creditors, as it relates to the Chinese government, and as it relates to all other financial institutions, is one huge way to move forward with dealing with this. We have to add the domestic lenders to that as well.
All right, looking at the economy right now, can you identify, some achievements, with this present debt level that we have now?
It is tough to do. It is tough to do. Numbers do not suggest that there should be a positive outlook cast on the immediate past. If what the report of the Debt Management Office is anything to go by, then it looks like it's not been a very encouraging period. The loan profile has increased steadily. The debt service rate has increased steadily. The implication of that is that government has little fiscal policy room to really do anything that matters for the Nigerian people. So in terms of scaling it, I think it's not an easy one to say. The government has really had to deal with significant challenges in COVID-19, the drop in the cost of crude oil, challenges associated with really maximizing Nigeria's capacity to export. It's OPEC given crude oil quota. But all of those, are important factors that I think has to be looked at in terms of the next administration as well. So that in the context of this particular outgoing government, the rise in the debt profile is a challenge that is going to be confronted seriously by the next government.
And if the next government, the incoming government, is going to also go for more loans, would that make any sense at all?
Loans are not bad. Debts are not bad. Governments around the world finance their activities through debt. The challenge is what we do with them. Do we have in place judicious mechanism to monitor these loans? Are we ensuring that the loans are not, siphoned into some corrupt means? Are we going to monitor the projects for which they have been used? Are we going to, most importantly, get loans to really deliver on significant infrastructure projects, significant job-creating projects that will have meaningful impact for Nigerian lives? Those are the real questions. And apart from that, then you have to think about what are the terms on which they are being gotten. Are they transparent enough? By thinking about the Chinese loans, do we know about the private creditors that are giving loans to Nigeria? Those are the key questions. So loans and debts in themselves are the norm of today's economy. The key question are what are the policies that are being put in place and how are we implementing those policies to ensure that the reasons for which the loans are procured are really being met.
We've definitely had that debate, about Nigeria having a revenue problem. Some say it's not a revenue problem, that it's a spending problem. What do you think the next government can do to generate more revenue? Because with this level of debt, I want to believe if we get more revenue, we'll be able to take care of it easier.
Well, certainly. I think you have hit on one very important point. We can generate more revenue. Illicit financial flows going out of Nigeria is a huge challenge. A lot of the opportunity governments have in Nigeria to diversify the economy has not been embraced wholeheartedly. At the end of the day, we continue to turn around to the crude oil, which is subject to a lot of fluctuations. So diversification of the economy is critical to generating more revenue. Number two, we have to find ways to stop illicit financial flows, by which I mean, the way in which, ill-gotten, resources are just easily moved out of the country must be stemmed from its source. This way, at least in these two areas, we will see that we're able to really move back the drawing board and then start thinking about ways in which our revenue can be increased. Of course, tax is there. But that's one that will be felt by the everyday Nigerian if that is the way to go. But it doesn't exclude it from happening in terms of expensive resources that are being imported into the country that makes it really difficult for local producers of commodity resources to thrive. For example, is one area the government must look at seriously. So, thinking about those 3 points, I think is a huge one if the government thinks about them. And to recap, these are diversify the economy to ensure that we tap into today's economy and not rely on crude. Number 2 is to stem the outflow of funds from Nigeria in illicit ways. And number 3 is to think about how to utilize taxation in a way that really delivers and encourages local manufacturers.
All right. Well, I guess one good news is that we got that report that oil production is inching back up closer to that 1.8 million barrels per day. So that's some good news. And I guess I'll take all of that as your advice for the next CEO of Nigeria.
I think you are right. We have to look on the positives here, and Nigeria has a lot of it in store.
All right. Well, I know you won't be voting from over there. No diaspora voting. So wish us luck, I guess.
Oh, well, I wish Nigeria, my dear country, the very best. Thank you very much.
Thank you so much, Professor Olabisi Akinfugbe, the co-convener, African Sovereign Debt Justice Network. It was great having your perspective today. All right, so we'll take a break now. When we come back, AFEX Commodities Market Update is next. Do stay with us. All right, for the AFEX Commodities update now, the last trading week, we saw mixed performance across key indicators. Turnover declined by 46.27% from 6.16 billion naira to 3.31 billion naira. Also saw a decline of 29.01% in the volume of contracts traded. There's, however, some increase in the number of deals traded by 14.10%, closing at 348 deals, as well as an increase of 2.94% in the FX Commodity Index, closing the week at 472.51 index points. The FX Export Index witnessed a decline of 3.69% from 233.81 points to 225.18 points. The volume of contracts traded, we saw increased volume across paddy rice, sesame, and cashew. Price across grain commodities, we see soybean that topped the Guinness chart, gaining 1.36% to close at 353 naira 95 kobo for a kilogram. Across export commodities, cashew nut topped the Guinness chart by 4.93% to close at 553 naira 56 kobo, while sesame followed closely by 4% to close at 1,040 naira per kilogram. However, ginger, that declined by 11.80% and closed at 900 naira per kilogram. All right, let's take the conversation forward. Now, we see the lack of proper storage facilities remains a significant constraint to increasing African farmers' capacity to produce and sell agricultural commodities. According to World Resource Institute, almost 40% of food in the region perishes before it reaches a consumer. The lack of proper storage is a crucial driver of these losses. Join me now is Ajia Abdul Qadir, supply chain manager at AFEX, joining me from our Abuja studio. Great to have you. Good morning.
Hi, morning, Ladi.
So I know, obviously, storage plays a vital role in the food supply chain, but what are the driving factors, of this infrastructural gap in Nigeria, and what extent is the lack of storage infrastructure, affecting food production here? Because we don't want the foods spoiling before it gets to the consumers.
Yes, Ladi. Thanks for having me. So pretty much over the last decade, we've had to see that 40% of the food that is produced in Nigeria and by extension in Africa has been lost as a result of the poor storage system that we have. by and large, part of the factors that have, driven this is not far-fetched from the fact that the finance that is required, in putting all of this infrastructure together is quite expensive. A point of view, when you look at the cost of constructing a silo, it requires huge capital. So, and a lot of investors try to shy away from going into that investment. And the simple reason is that the return on investment in building a silo is quite. It takes a lot of time before they're able to get back their funds. So a lot of people just look away. Even for the warehouse system, you would agree with me that in building a warehouse is quite very expensive as well if you have to follow the due process to meet up with the international standards. So these are a few reasons why we have this infrastructural, deficit.
And obviously, this new age of technology and innovation in the agricultural sector, what are some, smart storage requirements for achieving Africa's food security?
So, Ladi, one of the smartest storage way that is globally accepted is the silo system. For the silo system, one of the good thing about silo is that whatever you put into the silo is most likely what you will get out. So if you are able to get it right in the first place, if you put in commodities, let's say grains that are good, that are free of infestations and what have you, you are sure that you'll be able to bring out a good commodity at the end of the day when you want to maybe process it or consume it. Also, the warehouse system itself is not so bad. It's just that it's a bit dicey. You need to ensure that you construct this warehouse in such that it fits to global standards, such that these commodities are able to be accommodated well and being kept well in these in these warehouses. So, for me, the best form of storage still remains silo. It's just that it's quite expensive.
Yeah, quite expensive there. But in Nigeria, the bulk of farmers still employ traditional, storage systems. Given the advent of technology in the sector, how do we ensure it flows down to these farmers? Essentially, pushing adoption, among the farmers.
Yeah, so Ladi, what we have been able to do over the years in FX is that we ensure that, we bring a lot of these farmers under our preview, get them registered and, give them access to, this warehousing system. Part of what we've been trying to do as well is to see how we can, get into the remote areas where agriculture is being, agric is being practiced as well. See how we can bring them on board so that they can be able to enjoy some of this benefits that comes with, working with FX. So part of what we do is to ensure that we provide facilities, sort of storage facility. And the most interesting part of it is that we ensure that we take these facilities very, very close to the farmers, and and it comes as a fee at a fee, not very expensive. There's no farmer that would say they cannot afford, as little as what we charge. So we ensure that at least with that, we are sure that we'll be able to get to, more farmers, and then we won't stop until we get to almost all the farmers in Nigeria and at Africa at large as well.
Yeah, quite a big feat there. But do we currently have smart infrastructure that will, improve the agricultural space in Nigeria?
Yes, I would say we do. For FX, yes, we do have a very big, robust, infrastructure that accommodates us to, play in the global space. For example, I will give you the e-warehouse receipt system that we operate in FX. The idea behind that e-warehouse receipt system in the first place is that when a farmer comes to the warehouse and brings a storage, we issue this e-warehouse receipt system to the warehouse, and in turn, the farmer is supposed to be able to walk into any bank to be able to redeem, its cash if he wants to, or still keep it, But that is still in the pipeline, and we are pretty much sure that very soon we'll bring that to light. And one other thing that it will interest you to note is that we have a very robust database, such that we have all of our farmers in this database. And what this database helps us to do is that we are able to, identify the needs of our farmers, and also enable us to be able to plan properly for these farmers. So if you check our database today, you have an Hussein Ikarada in Saminaka. It tells you the land size that he owns. It tells you the soil type that Hussein Ikarada equally has, and that informs our decision on the kind of input that we would give to them when the planting season comes.
All right, before I let you go, obviously this whole cash scarcity thing definitely impacting everybody, and I'm wondering how that's impacting your business at this time.
Well, Laddie, it's not funny, right? Because a lot of these guys that we operate with are farmers, and a lot of them want to have their cash. As a matter of fact, we've been trying to see how we could try to limit this, to reduce this struggle amongst workers, because a lot of the people that work for us, they mostly desire to have cash before they can move. So it's pretty hard to have your trucks get loaded for you. And, a lot of these guys will say, if you cannot pay me cash, it means that I'm not going to work for you. So it's really tough, but whatever it is, we're trying to see how we can cushion the effects. But we believe that this policy is for the betterment of Nigeria as a whole.
Right, even though it can get painful sometimes, but obviously we're looking for the greater good. Thank you so much, Ajay Abdulkader, Supply Chain Manager at Afex. Thank you.
Thank you for having me. Thank you.
All right, and do remember, you can always go to the Afex website there, africaexchange.com. You can also follow their social media, Afex, at Afex Nigeria and at Comex by Afex. And from the commodities market, let's move on to other markets now, right here in Nigeria. Looking at the fixed income market, we have Willie Bong here with the details. Will, great to have you.
It's good to have you, Laddie. It's good to have me again. I mean, yesterday we talked about Triple G. And
Triple G.
You said if it had more legs to run, Triple G did put on some running shoes yesterday.
Like,
it was more like, it's the speed at which it is accelerating.
Exactly.
It is phenomenal.
Like being an investor not invested in that, it is like, so painful.
It's really painful. It hurts. It hurts that much.
It hurts so bad.
Anyway, so we're going to look at the bond space now and see that trading in the bond market was bullish. Yields were not, was trending down in that space. Average yield contracted by about 3 basis points to 13%. Across the benchmark curve, we did see average yield declining at the short end with 6 basis points, and the long end investors demanded the April 2023 paper there and the March 2050 paper. Well, that dropped by about 6 basis points. And when we look at the average yield, it closed flat, at the mid segment. Now, the NTB Treasury bills markets traded with bearish sentiments. Yields are beginning to trend up in that space now. Average yield expanded by 4 basis points to about 4.1% across the curve. Now, the average yield increased at the short end 9 basis points due to sell-offs we saw in the 16-day paper. I mean, now, but that was flat at the mid and the long segment. Elsewhere, average yield was flat at the almost segment, about 3.8%. Now, we're going to talk to Ramat Babash, who's acting head of Treasury Fixed Income, ABN Quest Merchant Bank. Ramat, it's good to have you on the program. Ramat, could you unmute your mic, please?
Sorry, Will. Good morning.
Good morning. It's good to be here. Ramat, we've seen FAC inflows now has been distributed to the three tiers of government. How much impact is that inflow expected to have on the system when it actually hits the system at this time?
Okay, so what we've seen in the last couple of weeks is that yields on treasury bills have gone higher, like you said, and that's really because of the liquidity squeeze that has been in the system. Coming into this week, we expect FAC to hit the system today, or worst case scenario tomorrow. There is a treasury bills auction today, and we actually expect that to have some impact, as most banks will be looking to invest in the treasury bills just to avoid being debited in CRR by the CBN. So pretty much yields in the secondary market might be coming slightly lower. However, because of the volume on offer at the treasury bill space, we might not see so much. We will definitely expect to see yields in the primary auction going higher.
Well, before we step into the primary auction, you're saying that we should expect yields to keep trending lower in the treasury bills market when this FAC inflow comes in. But how do we close the gap? Because we just want to look at inflation numbers. Now, how do we close the gap between inflation and yields in the bond space?
Okay, so we don't expect inflation numbers to align with yields in the bond space or the fixed income space as a whole. And that's just because we have a lot of things happening in the next couple of months. Liquidity will be coming into the system in March. There are promissory notes maturities. In April, we have the 2023 bond maturing, April 2023 bond maturing, and that's going to bring in over 600 billion into the system. So with so much liquidity coming into the system, we expect to see people replacing their instruments that are maturing, so a lot of demand is going to creep into the system, and of course yields might be trending lower going into the second half of the year. So definitely we do not expect inflation numbers to align with bond yields.
So if we don't expect it to align, what hope is there for investors? We're looking at the second half, because the second half of this year we expect to see inflation probably trend lower. Do we see that happening with Nigeria's current inflation rate, at the rate at which it's currently galloping?
Okay, so we expect that once the Naira redesign or cash scarcity issues are resolved, once the elections come and they go, we expect a bit of normalcy to come back into the system. And of course, if everything comes back to normal, we expect to start seeing inflations probably dropping, given the base effect from next year. So if that happens, of course, with inflations coming lower, we don't expect investors to be expecting much higher yields on fixed income instruments.
If you look at the equities market space, we're saying that it's had a bit of a bullish run for some time now, and this is, well, we can attribute it to the low yield environments in the fixed income space or the fixed income market. Would you say that is it because of the disconnect we are seeing, or are equities going to keep trending higher? What do you see for equities market vis-a-vis what's happening in the fixed income market?
So truth of the matter is they both trade, should I say, opposite. So one market is down, you see investors moving to the other market. Of course, everybody is chasing returns. So if the returns in the fixed income space is relatively smaller, we expect people to typically go into the equity space. And of course, once the returns in fixed income goes higher again, we expect a return of investors to that space. So it's just going to continue to be that same thing we'll be seeing in the markets.
So what are expectations from the NTB auction today you mentioned earlier?
General market expectation is that stop rates for the one-year paper should be between 4% to 5% level, or possibly slightly higher. Because in the secondary markets, even though the stop rates at the last auction for the one-year paper was about 2.24%, market has been trading them significantly higher, given the lower liquidity in the system. And so, of course, people have been trying to sell off their bills to raise liquidity. So going into today's auction, and with over 240 billion on offer for the one-year paper, we actually expect the stop rates to be higher than the 2.24% we saw 2 weeks ago.
So if stop rates are going to be higher, do you think investors should trade cautiously? Should they buy more? With the crunch in the Naira now, do you think investors are going to, buy a lot this time around?
For those that have maturities, they might be looking to replace. And of course, there are certain buckets of investors that will definitely always have to buy treasury bills because of the way their assets allocations are structured. They will always have to have treasury bills. So they will need to buy those bills just to fulfill regulatory demand. So yes, we will see some of these investors coming in. But generally, a few people might feel the yields are lower. But the question again is, what are the alternatives for them, for those looking at the short term, or unless they want to do the fixed deposit or other money market instruments, really. But generally, we think people might want to buy, given the fact that liquidity is coming into the system in March and also going into April, like I said. So people might want to start stocking up on instruments for now.
So we'll probably be expecting an oversubscription for this NTB auction. So thanks so much, Ramat Baba, Acting Head Treasury, FBN Quest Merchant Bank. Thank you so much for joining us and sharing your insights on the program.
You're welcome.
So just quickly look at the equities market. We saw that reversed gains that we saw in Monday's trading session. International Breweries was the biggest corporate there, and the Fugas, the tier 1 banks, Access Bank, UBA, FBNH. We also saw GT Code trending lower yesterday, and that affected the all-share index. We closed marginally lower, 0.06% in yesterday's trading session. We also saw a total volume of transactions declining by 64.4% to 254.17 million units. But value was quite outstanding yesterday. It was 15.58 billion naira transacted in 2,950 deals. Deals was lower than what we saw on Monday. Now we're looking at sectoral performance. We did see that earlier, but I did mention that the figures were the contributors to this downside here. We also saw consumer goods here. International bureaus brought this down. Industrial goods, I think Lafarge did that. Insurance, oil and gas bumped up yesterday. MRS was a strong gainer in this segment. Now, we're also seeing financial sectors dominating top trades in yesterday's trade. We saw GTCO, Zenith Bank, Access Gold dominating trades. GTCO still leading 31.07 million units traded. It's still followed closely by Zenith Bank. GTCO, I spoke to an investor yesterday. I did ask what's happening with GTCO, and we're waiting to see what investors are stocking up on that. That is still a developing story. Now, MRS, as I mentioned, was the biggest gainer in yesterday's trading session. We see the top gainers of yesterday: MRS, Triple G, Living Trust. These stocks have been doing wonders, especially Triple G. It's jumped, it opened at 2 naira 18 kobo yesterday. It's closed at 2 naira 39 kobo, an uptake of 9.63%. MRS gained 10% yesterday. Living Trust is also following strongly with strong performance. Investors are expecting strong performance in its Q4 earnings, and so that is driving the share price of this particular stock. It closed at 2 naira 65 kobo yesterday, up 5.16%. Now, we see the unlisted equities market yesterday. Well, we did have losers yesterday. Veritas Capital was down yesterday. Link Assurance and International Bureaus, which brought the market down as well, contributed to the market's negative close. Unlisted equities market remained unchanged. There was not much in that space yesterday, and remained unchanged at 716.48 points. Market cap still at 941.47 billion naira. Only 2 stocks were traded in yesterday's trading session. If we look at it very quickly, we saw the volume was about 30.02 million, value 27.07, and in 4 deals. But we had 2 stocks that were traded yesterday. That's what I want to look at quickly right now. The 2 stocks that were traded yesterday, we did have UBN Property, which had 30 million units of its shares traded, and Friesland Campina Wamco, which had 18,770 units traded in yesterday's trading session. We're just hoping that there's some form of activity. Little activity happened in yesterday's trading session. We're hoping that the investors, give it a bump, and we see maybe a boost in at the end of today's trading session. But we're just going to we'll keep watching, because that's what we do. We watch the market, and we'll see, and we keep you updated with the trends, ladies. I don't know what we do here. Wait and see, because we can't predict what's happening.
And obviously, my question to you now, obviously, is I want you to check your crystal ball and point me to the next Triple G.
The next Triple G. Lady, I can't do that. Sorry, I can't help you with that.
You can't point out.
I can't do that.
Maybe after the show, you really think about it.
Yeah, maybe we have to look at it. But if I give you to read right now, and everyone else jumps in at that, I don't want to be held responsible.
Exactly, because it might not be the next Triple G. All right, thank you so much, Will. It was great having your analysis there. All right, so we've been looking at the NGX and the fixed income market and the unlisted market. Now let's head on to other markets now. See Bitcoin there attempted another upside break above the 25,000 resistance zone. Couldn't stay up there, couldn't stay above it. The bears were active near that $25,000 zone, and the high was formed at $25,120. We see the market, it's still greed. Right now, still been oscillating between neutral and greed, and 59 points is what we have. We're at 60 a while back, but now it just shows that investors are still quite bullish in this market, showing that sentiment right now is towards the upside, but there's always that downside risk, when a market is feeling quite overheated at the point. So let's look at the market cap, 1.09 trillion, down 3.66%. Volume traded is up 11.38% this morning with the sell-offs we see in the market. Bitcoin dominance sitting at 41.46%. That's up 0.20%. Let's look at the price of Bitcoin this morning at 8 a.m., $23,978, down 4.09%. And we see volume traded $33.66 billion, the same amount of volume we've seen this time of the morning. Let's look at Ethereum. always holds that 1.6 level regardless of what happens in the market, but it's down 4.10%. So this 1.6 level is acting as some kind of incredible support for Ethereum at this point. Volume traded at $9.32 billion. Let's look at the top alts by market cap, see how that's looking. It's all red, with Matic there, the biggest downer, down 8.92%, $1.34. It's had a good run in January there, and I was starting to see some pullback, profit taking. BNB 300, still holding that $300 level, down 3.15%. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Good morning.
Good morning, Laddie. Good morning.
I see you're still excited, even though we have that pullback. But, you know, some have called it a bear market rally. It's not going to last. But we're in greed right now. And, Rume, if you remember, most of 2022, this market was in extreme fear and fear oscillating between those levels. But now we're seeing greed. But the question is, can this greed be sustained? What are your thoughts on the market right now?
Laddie, the truth is that I'm not going to expect anything different from last year. This is because when a couple of us, the last time we spoke, I even said it, that people should be careful. You know, even the Fed has actually, if you ask me, not in control of the market. You know, they try to bring down the inflation by going to 25 basis points, and now it seems that inflation is still very strong, and the jobs are actually very strong, which, if you relate to risky asset like Bitcoin and the entire cryptocurrency market, it means that this is going to be short-lived. This is really going to be short-lived. It's a situation whereby people are still having a lot of cash in their hands, getting involved into risky assets, and you can see that the market is actually reacting to it. Hopefully today we're going to be having the FOMC meeting, where it's going to be really ascertained that we're going to see a more hawkish Fed, which means that we might see some downside. What happened in some previous week now could be regarded as a bear market rally, right? But a lot of people, one thing I find very shocking is that celebrities on YouTubers, and even a couple of the big names in the space are calling for Bitcoin 30K, 50K, then we go back to 60K again. That is not correct, because the market hates uncertainty. And we're seeing what is going on in the world today. The Russian invasion of Ukraine just marked 1 year, and it's still very hot right here. Even the fact that the US president have said that Russia will not win the war, and Russia is actually intensifying its effort to do so, and as well as other things going on in the world today. So we need to understand that all of this play into the market. The market does not move in isolation. The market does not move in isolation. It's an opportunity for us to watch and see where the market is going, then join when the market has actually capitulated. So guys, we all should be very importantly taking the right step to be smart and make the best of it.
Yeah, geopolitics still playing heavy on these markets, and obviously we're going to get the Fed minutes for their last meeting. That's coming out today. Maybe that's why we're seeing some of these sell-offs. But, you know, looking at the market, you know, right now, generally, we know the Fed is, you know, doing all it can to tell the investors that we're still going to raise rates. But it looks like the investors don't care. They still want to make profits in this market. They still want to stay in, you know, at this time. Do you think the investors will be resilient enough in 2023 with all that's happening with geopolitics, rate hikes, and other debt issues around the world now?
The investors are ignoring the signals, which is dangerous to newbies, because the newbies, all they want to see is green candles. They are ignoring the signals right there, because they have a lot of money to play with. So when we see the market downside, huge downside, I can tell you for a fact, not a financial advice, that I won't be surprised that this year might be a bit worse than last year. That is going to cool down the system. For those that have money, when their portfolios are even beyond what they expect, they begin to take logical decisions to doing things right. I think there's still a lot of money in circulation. There's still a lot of people in profit. from from the decade boom. If I'm looking at it from a longer range now, because in the last decade, Bitcoin, cryptocurrency, and the Bitcoin market could be said to be one of the best, not one of the best performing assets. So all of those funds, we are going to see a situation whereby it's going to go down at some point, then see fresh money come into the market again.
Yeah.
It's natural. So, but people don't want to see this, but this is the fact. Then we see another movement again. But me, I'm also taking steps to make sure that funds are out of the market to be safe, and as well prepare for possibly looking at the later part of this year to early next year, basically.
Right. I guess your crystal ball is saying different from what investors are feeling right now.
Not the financial
advice. Let's look at other issues now. Regulation, that's one big issue right now in the crypto space. And a blockchain association CEO, he's saying that crypto regulation is happening behind closed doors. What does he mean?
Yes, you know what? FTX actually made a lot of things happen. I think Christine Smith, the CEO of the Blockchain Association in the US. We also have our Blockchain Association here in Nigeria as well, trying to get engaged with government too. So, but what he's saying is that the government is not. The Congress is not doing what it ought to do by engaging critical stakeholders, to get involved. But you know, the Congress is actually slow now because of with progress on legislation, because of what happened with Sam Bankman-Fried. You know, the former CEO of FTX has this very strong relationship with a lot of the lawmakers, which actually is not a good signal for them, and did end up as a good signal for them, or for them having some campaign funds being given to them. And it turns out that this guy actually mismanaged a whole lot of things. So they decided to take a more closer approach. But I think the stable coin regulation will happen very soon, and we might see some sort of conclusion for stable coins. For those that don't understand what stablecoin means, so it's more like the fiat equivalent, that is the dollar equivalent of the fiat currency, but this time in digital currency, right? To buy cryptocurrencies, you know, they're going to have some level of regulation, and regulation is actually needed, but it will take time for us to have all Congress come together again to talk about the entire regulatory process. But before then, you know, the SEC is already going really hard on all of these exchange platforms. I mean, Gary Gensler, and which also, I think, will make some other bad actors be careful of getting involved in the market, because at the end of the day, they might be slammed some very huge fine. Yeah.
All right. Well, we'll keep watching, because I know obviously the US SEC there looking straight on at stable coins at this time. Thank you so much, Romeo. We'll be looking out for those Fed minutes, see how the market reacts. Thank you.
Thank you, Ladi. Thank you.
All right, so that's it for the markets today. We see the top gainers counted there, with ANKR topping that count at 32.51%, the biggest double-digit gainer this morning. It could be because of that news about their partnership with Microsoft. So that's what getting investors all excited with that one. All right, that's it for the markets today, and that's it on the show. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated with more updates and developments in the world of business. You can watch this again on our YouTube channel. Flip over to YouTube, check our videos, and you can watch all our productions. And don't forget to subscribe. Thank you so much for watching. I'm Ladi Williams. Enjoy your day.